The second item that we need to calculate is the interest received. Yeah, can use the method number one, that is using the T account, or you can use this formula. Yeah, the interest received is equal to interest revenue minus increase in interest receivable plus decrease in interest receivable. Repeat again, interest revenue, okay, is equal to, interest received is equal to interest revenue minus increase in receivable or plus decrease in interest receivable. I'll give you a simple example. In these questions, our interest income is 5,000. Interest income is 5,000. So you expect this is cash. Yeah, but you have to check again your interest receivable. Yeah, you have to check your interest receivable accounts whether it increase or decrease. So let us go to your interest receivable. So where is your interest receivable account? So this is your interest receivable. Okay. Previously, you expect to receive your interest receivable is 150. Now your interest receivable is only 100. Okay. 100. Your interest receivable, your balance, yeah, brought down, your opening balance is 150. Your closing balance is 100, mean reduce by 50. All right, reduce by 50. Okay. Previously, you expect to receive interest 150, yeah, $150. But at the end of the year, you check that your balance of interest receivable has reduced by $50. So how can this interest receivable reduce? It means that you already received $50 cash. Am I right? This is your interest receivable accounts. If I put it here, this is your interest receivable. This is your balance 150. Your balance carried down is 100. So the different 50 here is the amount that you already received. So when you receive the interest, what you're going to do is you're going to debit cash, credit interest receivable. So reduce in interest receivable mean cash increase. I repeat again, reduce in interest receivable mean increase in cash. Or if you want to do the same method number one as what we have explored before this, if you assume all these interest, all these interest 5,000, yeah, is not yet received at the beginning. So you're going to debit interest receivable, credit interest income. So 5,000. So the balance here will be 5150. The balance here will be 5150. What is the missing number here? So this is the interest received. Interest received. So this is method number one. So it's going to be 5050. 505. That is your interest received. Okay, interest received. Or you can use the formula if you're not, yeah, your interest revenue plus your opening receivable minus your closing receivable. So it's going to be 5,000 plus 150 minus 50. So that's why you get 5050. So that is how we determine the interest receivable. You can use method number one by using accounts, or you can do method number two by looking at the changes. So this is changes in your interest receivable. Changes in your interest receivable. So let us move to the next one. We are going to determine the cash paid to suppliers and also employees, determine the interest paid, determine the income tax paid, and finally going to summarize cash flow from operating activities. I did give you two examples on how to determine the cash received from your from your customers, as well as determine the interest received, the interest received. So applying the same method, either method one using the T accounts or by using the formula, you will able to determine all other items. So this is just a simple task for you. I'm giving you maybe 1 or 2 minutes. Can you determine the cash paid to suppliers and employees? Okay, cash paid to suppliers and employees. So let us go to the questions. Okay. Okay. This is the information available. Okay. You have the cost of sales, the cost of sales, okay, and also wages and salaries expense for 8120, okay, and then for your account receivable, you have 70,000, your beginning. At the end, you have 79,000. So this is for your account receivable. Okay, for your account receivable. So can you use these informations, later on to help you to determine whether the amount related to your payment to your suppliers as well as to your employees. And then we have wages and salaries payable over here, 4,000 and then 5,000, 4,000 and then 5,000. So this is the same techniques we're going to use to determine the amount paid to the supplier and amount paid to the employees. Okay. Please take your time, yeah? How to determine the cash paid to suppliers, okay, and employees. Okay, you have to go back to the basic accounting there. That payment to suppliers may comprise purchase of inventories and payments for services. So payment for services. If we want to look at the sale before this, we use account receivable. So for your suppliers, you can check your cost of sales, cost of sales, and then you're going to see the increase and decrease in your inventories. Okay. So what are the formula? So the cost of purchase of inventory made during the period is equal to the cost of sales minus beginning inventory plus ending inventory. So this is the cost. Talking about the cost. Last time is revenue. So for cost minus opening plus closing. For revenue is revenue plus opening minus closing. It's opposite. So, or you can see cost of sale plus increase in inventory or decrease in inventory. So let us check our answers here. Your cost of sale is 480,000. So you have increase in inventories, increase in inventories by 5,000. Your inventories increased by 5,000. So mean your purchase of inventory also increased by 5,000. So your total purchases for that year is 485,000. So this is your total purchases, 485,000. Okay. And then you compare with your increase in account payable. Account payable is your account associated with the purchase. Account receivable is for sale, account payable is for purchases. You see that your increase in account payable, mean you pay less. Yeah, you pay less. Yeah. Increase in account payable, what does it mean? This is your account payable, increase, for example, this is 10,000, and your account payable increased to 13,000, so it means you pay less, you borrow more. So I'm going to minus here 13,000 from your account payable, so your total purchases payment to the supplier for that year is not 485,000 because there's increase in account payable here 3,000. So your payment is 482,000. So this is the formula to determine payment to supplier. Even though you purchase 485,000, there is an increase in your account payable. So when you borrow more there, you don't pay much. So that's why we have to minus we have to minus 485 with 3,000. So mean we only pay 482. What happened to the 3,000? We still borrowing them. So if I go to this account, just use this example. Okay. Go back to this example. Your account payable, let me go to the questions. Your account payable is 42,000, 45,000, 42,000 and 45,000. If I use the first method, it's going to be 42,000. This is 42,000. This is 45,000. Okay, this is 45,000. So when you make purchase, you're going to credit your account payable. So you're crediting 480 here, 480 here. So this gives you 522. I'm sorry, 522. And this one should be 522 as well. Yeah. So this one should be, the difference should be 482. 482,000. So this is the payment to suppliers. Yeah, payment to suppliers. Okay. Increase in account payable mean you pay less. Increase in account payable mean you pay less. Decrease in account payable mean you pay more. Yeah. So this is method number 1. This is method number 2. Now you know that payment to supplier is 482,000. You need to do two-step process. The first one by looking at the inventories. Second one by looking at your account payable. For your inventories, still remember your cost of sales, because this is cost, previously is revenue. So you're going to minus opening plus closing, and for the payment you will minus, yeah, minus your, sorry, yeah, the different here. You're going to add your opening, and then you're going to minus your closing. So you need to remember this formula: increase in account payable, this is increase in liability. Increase in liability is in increase in assets. Yeah, increase in assets here you plus, reduce in liability you minus. Okay, so that is for the first, for the payment to suppliers. Payment to suppliers.